Welcome everybody. For those that do not know me, I am Chris 70, the CEO and founder of 70 Mortgage Note Investments. First, I'd like to take the opportunity to thank you for being an investor within the fund. Recently, you should have received our Q4 of 2022 update. And typically following those updates, I like to record a video for all of the investors to briefly highlight the past quarter or past year in this case, as well as really focus on where we're headed and what is down the pipeline in the next 90 days. So within the last quarter and within the last year since opening the fund, we are seeing significant growth within the fund because of the investors that are coming in. And with that, we are in acquisition mode is what I would like to say, where we are reaching out to a lot of sellers and looking to acquire these assets. Last year, we were able to acquire over 100 assets within the portfolio with a mix of performing and non-performing loans. The performing loans from last year were slightly a little bit higher than the non-performing, and we'll be balancing that out within any portfolio. It is that balancing act to properly manage that portfolio. But within the first quarter, I want to dive into is we're going to be looking to significantly increase the size of our portfolio. Our target is to double the size, and it could be doubling in the means of number of assets, but based on the asset acquisition price and the price or value of each asset, that could fluctuate. But from a volume or dollar assets under management perspective, we're going to be looking to double that within the first quarter. Our investor relations team is going to continue to reach out and market and solicit for additional investments within the fund. We anticipate that will run through this year, but definitely through the first quarter. We'll have a few changes, minor changes coming to the fund. I'll let investors know first that the minimum investment is going to be increased. The minimum investment, it was $500, and in February 1st, it will be going up to $2,500. So our investment relations team, any questions, comments, concerns, please feel free to reach out to them. You can have access to your account, but at any point in time, Tony, Katie, or Lauren will be happy to assist you in any way, shape, or form. Within the first quarter, investors will also be receiving their tax documentations, working with our accounting department on getting those documents out to the investors as quickly as possible. Again, those should be a 1099 dividend form that you'll be receiving, not a K1. Just want to specify and clarify that again. And then we got to talk about our investor relations asset management team has been working very hard and diligent in regards to the acquisitions, like we mentioned, of new assets, where we mentioned again doubling that portfolio, as well as on managing our current assets. We have people who strictly just manage the current assets, while myself and a few other team members are also looking at that acquisitions. During the holiday season, we did not see a significant decline in number of payments. In some years you may see that, but this year has been a very strong year. Even though inflation, as anyone who turns on the news knows, inflation is still significantly high. There's some concerns in the markets regarding home values. The markets themselves were down approximately 20% last year. So some net wealth or net worth is getting eroded. 2023, they're anticipating a lot of the same. It's, if you listen to a lot of the experts, they're not expecting 2023 to be a banner year in any of the markets. Now, how does that affect 7E? Again, as we've mentioned in the past, we're not correlated to the stock market, and our correlation to the real estate market is very limited. And we have other videos that outline, the price decreases in home values, and because our investment to value is significantly lower, that does not have a significant impact on our portfolio. We do believe there'll be an uptick in delinquencies and defaults as credit card debt continues to rise and increase. People are struggling to pay those bills. So we do believe other funds will start to liquidate some of those assets, which will give us more opportunity. We already saw that in Q4 of last year, and we expect that to continue to increase into 2023. So that's what we want to share with people today. I wanted to keep it brief, and if you have questions, please, again, reach out to the investment team, invest@70 Investments. And if it's something where you would like to set up a call with any one of us, including myself, I'm happy to answer anybody's questions. So thank you. Happy New Year, and look forward to continue this journey. Take care.